Alright guys, welcome to a new year. Welcome to Trade Wars. As expected, trade wars are back. Unsurprising that. We thought they would be, as soon as Donald Trump gets elected, you know that trade wars are probably going to be coming back. So the question is, with them back, are you looking in the right places? We got a great example of this, pretty much first day back for everybody, Monday the 6th of January. Everyone comes back to the office. Everyone thinks, yes, we could get something on trade wars at some point soon. And boom, it comes straight away. So the first part of are you looking in the right place is understanding essentially really what trade wars are all about. And it really comes down to one simple thing, and that is tariffs. Everything trade war related is tariff related ultimately. Now, with anything like this, you have to look at these things from a reasonably simplistic basis. Looking at the end of the line of a story is a good way to start, the kind of ultimate outcome. I do a lot of this with traders that I train on executing on macro stuff, following narrative. We cover a lot of it in the 4th week of the 6-week course. If you want to know more about that, click on the link below. Right, simple way then to understand tariffs. Think of more tariffs. What do more tariffs mean? Well, what tariffs do is they increase the cost of imports by putting more tax on things. So import costs go up. This is not great for consumers. Arguably, it's also inflationary. On the flip side of this, if you are a foreign country or a foreign exporter, your goods are less in demand because they are now more expensive in America, in particular here. What all of this does is it reduces competition. The argument for tariffs is that it keeps the sort of spending within the country that you are in. Ultimately, it reduces competition. Not a great thing. The simple way to take this, though, rather than the Economics 101 approach, is dead straightforward. Tariffs, on the whole, are generally quite bad for equity markets, pretty bad for commodities, in particular copper, and also bad for any foreign currency, be that the euro, the pound, the yen, whatever, the yuan, whatever currency you want to look at. On the flip side of this is less tariffs, or at least less tariffs than expected. Good for imported goods, they don't get more expensive. It also retains demand for foreign goods, so companies importing or exporting to America are not going to see their goods rise in cost so much. It also provides more competition. Competition on the whole is good, at least theoretically. This should reduce prices for everybody as firms compete on a price basis. Not always the case, but theoretically this is the case. So that's your straightforward way to approach tariffs. More details on precisely how to do it, of course, can be seen on the course. So if we move on from there, what happened? Well, on Monday, 6th of Jan, what we got was what I would call a slow burner comment. Now, this is the kind of comment that is a subtle shift in the story. So the key bit to this is understanding the narrative beforehand. What had already been said? Well, what had already been said by Donald Trump is that he is going to put tariffs on everything coming into the country from every country. So essentially a universal flat tariff on absolutely everything. We then get this Washington Post article. So another part of are you looking in the right places? Are you reading the right news wires? Washington Post article comes out and says, actually, Trump aides are considering, as they called it, a shift to critical imports. So this is not everything anymore. All of a sudden, this is a reduction in tariffs. Whilst it's subtle and it's not described as a reduction in tariffs, if it's only on certain things, it's not on everything, therefore it's a reduction. But this takes a little while for people to kind of really get involved in. And as you can see on the chart, markets took their time to move. These are the key moving markets on it. I've got up there the DAX, the Euro, the S&P, and copper. They all moved higher. It's good for the Euro, it's good for copper, it's good for equity markets on the whole. But they don't move in a particularly fast way. Yes, it's pre-US session, so you'd lean more towards Europe, but even looking at the DAX, it's quite a slow and steady drift higher. Copper's perhaps the quickest, with then a steady, what I would call smoking chimney continuation, but on the whole, they all drift. Not the easiest to trade if you are going to jump on that first news comment, because they don't all go. It doesn't rush you on side. Quite a tricky one to actually deal with. The good thing about any kind of slow burning shift in a narrative is the potential for something more, of course, to come. And this is your smaller but faster move, the denial. The great thing about any denial, And as you can see, there is the denial underneath. Came out about 3 hours later. Any denial is great for a few reasons. You know exactly why markets had moved previously. So if you know why they'd moved, you can also have a reasonably good guess as to what the denial might sound like. What are they going against if you are to deny a comment? You also have had the chance to have a look at which markets moved, which moved the furthest, and therefore has the most distance to come back. And then it's finally just a waiting game. Of course, you don't always catch the fish, if you will. You're waiting for a denial which may never come. It may not get denied, and this becomes the new narrative. Who knows? But if you're there, you're ready, you know what you're going to do, and you know which market you're going to execute on, you are there ready for the denial. Good thing about denials, as I said before, is they're clear cut. You know what should happen, you know how markets should move, and therefore you are ready for it. You can get on that move, you hit the denial, and you get this quick move. You can see this on the charts here. Very, very fast, 1-2 minutes worth of movement, and that's it. Very, very quick, but that's the bit that you're after. You can jump in, you get that flash down, market stall, you get out. I will be doing a follow-up video to this, looking at the actual execution of this trade. How do you do it? What are you looking for? At what point do you give this one up as well? You'll see, as I'll show you in a moment as well, the scale of the move relative to the initial move. The initial move provides this long, steady move higher, and then you get this very, very fast. To illustrate the point further on the difference between a slow burning, subtle shift story and an absolute clean cut denial, fantastic bit with this is it's straight from the horse's mouth. It came from Donald Trump. It's not coming from anywhere else. It's straight from the horse's mouth. You can see this in the performance. The two notable jumps in P&L that you can see on the chart on the right, this is a 1 minute chart of where money is made throughout the day. The two notable jumps in P&L at around about 11 o'clock UK time and then 2 o'clock UK time were those two comments. But see how big the 2 o'clock one is. Very large, 2-3 minutes of very big P&L, and that is that. This is the difference between the steady move and the very quick, fast move. The other thing here to note is market selection. Last year, the year before, so much trade was done in treasuries, in gold, on the inflation story. Now we're moving to a different story. And this is why you're seeing the euro, the DAX, the Hang Seng, in fact, the S&P and copper being the main movers, the main place of action. This is what you need to understand if you're going to trade narrative. I'll be covering in the next video the execution of this as well. So we're going to look at particularly that quick move that you can see there. Very, very noticeable if you look on the bottom two charts. The left is the DAX, the right is the euro. Very noticeable moves in those. But how do you execute it? What do you target? And how do you know when to get out of a trade like this? So that's coming up. But until now, I will leave you with that. Make sure that you're aware of the tariff story and what you're going to do. And of course, are you looking in the right places? I'll see you guys all soon. Click the links below if you want to learn more about 6-week course. See you then.